Hey everybody, what's up? We are back with another stock analysis. Today we'll be looking at MGP Ingredients, MGPI. They are a company that specializes in ingredients for companies that make alcohol products. So distilleries, food grade alcohol. They also focus on storing those products as well. And a couple other things that go along with the company like wheat proteins, wheat products. So one thing to note right off the bat here is 800 million market cap. So this is a fairly small company, does have a 1.3 dividend yield. And another thing, target price is at 59, long-term growth rate is at 1%, which is kind of low, but sometimes that's a little bit of a shaky number. But target price is significantly higher than where we are now, which is definitely something to be interested in. If you look here at the mini chart, we could see they have taken a fairly long fall from their previous highs right around the low 100s, and they are now right around 36. So definitely a lot of space to make up for in the near future, hopefully. One thing I would like to point out right off the bat, all of their growth estimates look fantastic across the board. Sales 10%, 10-year growth is crazy. EBITDA is at 36%. Dividend growth looks solid. Free cash flow growth, although short term doesn't look great, long term looks really, really good. So overall, I think there is a lot of promise with this company. But now let's get into the financials and kind of see what we're looking at here. So, starting off with their income statement, the first thing I want to look at is their sales. And it looks like they have taken a slight dip in sales in 2024. This is actually the lowest they've seen in the past 2 years. Now, this is still an estimate for 2024, so this is not completed as of right now. They do not have their finalized earnings for the year in yet. So most likely will be significantly higher than it is now. So don't jump to conclusions just yet. But one thing to note is that their sales alone is higher than their market cap. So they have 836 million in sales, $800 million market cap. So right away, right there, I'm going to go ahead and say that this company is severely undervalued just based on that. Even net income at 106 million, that ratio doesn't make much sense to me, at least in my opinion. I honestly think that there is a lot of value to be gained through this so far, just from what I'm seeing here. But overall numbers look good. EBIT's growing steadily. Obviously, again, 2024 data is not complete yet. Net income is actually took a bit of a dip in 2023 compared to 2022, despite fairly significantly increased earnings. But again, that could just be driving more sales growth. I mean, I would assume that this company is in a growth phase just based on how their sales have been increasing recently. I'd imagine that is how they are going. So overall, I think sales growth at the moment is more important than profitability. At least for probably the next few years. I can't imagine they're focusing too much. Just being an $800 million company, they're most likely focusing primarily on growth at the moment. Next thing to look at is their total shares, which actually have decreased in 2024. Not much change since 2021, although a little bit of dilution before that, but that's no big deal. So realistically, not much change in their shares at all in the past 4 years, which is really good to see, especially for a small company. That's a very positive indicator. They don't need to bankroll themselves by selling off their equity, which is very good. So now heading into their balance sheet, let's see what we can see for their assets. And so far, so good. Lot of asset growth. This is also not including 2024 at the moment, which we will get into shortly. But overall, a lot of asset growth that I'm just seeing right now. So going into the quarters, we get some 2024 data. Their assets have been increasing every quarter in 2024. So looks pretty solid there, and that's not just driven by cash or anything. One thing I will say is that they don't have a ton of cash. They have 20 million in cash, and their short-term debt is no big deal. They don't have very much there, but they do have just under 300 million in long-term debt, which compared to their cash is not great. Now, with that being long term, that's generally not a crazy number. If we look at their overall debt to equity ratio, it's not anything crazy, but we'll get into that more in a little bit. But overall, balance sheet looks really solid. Looks like a lot of their increases are going into net property, plant, and equipment, which is good. Hopefully, we can see some increased sales growth off of that. But other than that, everything looks pretty solid. So now let's head into the cash flows, see what we're seeing here. Net income is fairly steady. Operating cash flow is across the board positive. And also, just in the past quarter, they have seen their largest operating cash flow of the past 2 years. And honestly, it's most likely their largest operating cash flow ever, which is good to see there. Net investing is negative across the board, which is generally what you want to see in a company. Financing cash flow is a little mixed, but overall it is negative, which is good. And it's negative because of reducing debt, which is also very positive. And again, they have spent the last 3 quarters repurchasing some of their stock as well, which is another very positive indicator, especially for a small company like this. And again, which we will get into later, just based on the drop off of their stock, I think it's a very smart decision for the company over the past few quarters here to be repurchasing. That just makes a lot of sense to do so. So that is a very good move by the company. Next up, just overall free cash flow. It's a little mixed, but overall positive. Especially in the last quarter, they had free cash flow of 24 million, which is good. Let's get into their segment history here so we kind of visualize some sales growth. So it looks like they were actually fairly slow growing for many years. And in the past 3 years or so, they've really taken off with their sales growth, which is good. It kind of shows some momentum with the company. And with this, again, you could see this starting in 2021. And if we zoom out here, we could see that in 2021, their stock price was much higher than it is now. And despite this, their sales have increased massively since then, and yet the stock price has decreased. So I think it's definitely an oversold product. I think there's most likely reasons for it to be this oversold, but at the end of the day, I think it will, at very minimum, retrace to right around probably this $60 range, just based on where there's kind of a heavy support level and a gap that needs to be filled here. So I think we can see that short to mid term for this company. So that's definitely something to look into. But last but not least, let's get into the ratio analysis here. And so no 2024 data, which I will pull up, although we will lose the averages, but that's fine. So 2024 data, gross margin is the highest we've seen in 2 years, which is fantastic. Almost the same with net margin, highest we've seen in many, many quarters at 14.5%, which is really good. ROE, ROA both look really solid. Again, they are the highest we've seen in a couple quarters now. So overall, I think there's a lot of improvement being shown here. One other thing to note, as I mentioned earlier, long-term debt to total equity is decreasing, which is good. And again, it is nothing really concerning at all here. Usually a healthy number is anything below 100 to 80%, and them being at 32 is really good, especially for a small company. Now, one thing you could say to this is that being a small company, they should be leveraging their debt more, but just based on their sales growth, I think they're doing perfectly fine without having too much debt. So overall, I think that's no big deal. And last thing I want to look into is any recent earnings reports we might be able to see here. And it looks like we can get something. So third quarter financial results. Let's see this. So some highlights here. Sales decreased 24%. I believe that is year over year for the third quarter. Net income increased 82%. So sales decreased, but profitability very, very largely increased, which is good. Net income margin increased to 14.8%. Basic earnings per common share increased. Consolidated gross profit decreased. So overall, I think it's kind of a mixed bag here where they did lose some revenue in their past quarter being reported, but overall, I think they increased their profitability enough to kind of cancel out the negative sentiment from that. Next, we'll see some other, I believe this is segment specific, so just different branches of their company. So their distilling section sales decreased, branded spirits decreased, and also their ingredients decreased significantly. So overall, third quarter does not look like it was great for them, although again, their margins are increasing. Their sales for the year at least are looking positive. We'll definitely have to see what happens with their next report, which should be out soon. We might be able to see here when their next report will be, but that's really what you want to look out for. So overall, let me see if I could find it here. Bum, bum, bum. I do not see where I will see that, but what we can do here is go into this and type in earnings report. And let's see. So their next earnings report should be fairly soon. Of course, I'm not seeing it anywhere, but it should be fairly soon. That is what you really want to watch out for, because so far, I think if they can pass their sales in 2023, I think they'll be good. I think we'll see a lot of growth from that. You can see that that earnings report did definitely decrease their stock price a lot from here. But I honestly think the increased margins and a lot of the increased metrics that we saw will help to bring this up in the near future. But overall, we are nearing a support zone. So I think most extreme case, they could see 20s again. Although I feel like just in that time since 2020, there is so much value added to the company that we won't see that unless something really major happens. So overall, I think it's looking really good, and we'll just have to kind of wait and see what happens with their next earnings report. So that's all I have for MGPI. Hope you enjoyed. Hope you learned something. Thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.